As I was speaking the other day, US stock market is currently experiencing a lot of downturn, and it is largely related with the big tech, primarily Amazon and Google, Microsoft, Meta, etc., who overbearingly basically have a lion share of the stock market, with the Magnificent Seven actually having close to $10 trillion in market cap. We already discussed that in the last month or so, they have shed close to $2 billion, basically $1 trillion in valuation, though that's like a close shave. And even now, with more results coming out after Amazon, again there is a big kind of push in the market that there are worsening recession fears towards the end of the year, and accordingly, a lot of Nasdaq and Dow Jones, etc., stock exchanges are going down. So, since these magnificent seven, namely Nvidia, Apple, Meta, Amazon, Microsoft, Google, they are all basically leading it to it. It becomes very important to really understand each of these companies, fundamentally what they do, what their modes are, what their competition is, and how do they differentiate with respect to others in the market. And once we understand what this Magnificent Seven is, we can possibly, extrapolate like how the big tech operates, and why there is an overbearing on the entire stock market for these seven specific stocks. So let's start the story with Amazon, because I'm more familiar with it. I have worked for them in the past, and I'll start out with them. So Amazon is a tech stock as well as it is a retailer, and it should be very clear until now that it's no longer just a market leader in e-commerce, but it is also market leader in cloud solutions through their AWS offering. That's also market leader. So it is very rare for a big company of the size of Amazon, which is already trillions of dollar in valuation, to have domination in multiple sectors. So not only does it dominate in the US, especially in the e-commerce with over 44% market share, and second being Walmart at just around 6% of e-commerce market share. Everyone else is less than 2%. So that's the level of domination that Walmart has. In addition to that, they also own AWS, which is also the leader in its own segment, quickly followed by essentially Microsoft, and then followed by Google in the GCP. Uh, uh, Dheeraj Kumar is saying Hindi mein bol le. Sir, today's podcast is in English, so I'll continue to talk in English. You can use the translation function. तो कुमार साहब आप ट्रांसलेशन देख लो, यूट्यूब में आता है, तो आज सबटाइटल पढ़ के ही गुजारा चलाना पड़ेगा, आज की पॉडकास्ट इंग्लिश के अंदर है. Sorry about that. So essentially, that's how Amazon has been. So these are the two industries in which it is totally a market leader. If you consider Amazon Alexa also as a component or a sector of the market, it's even leader in that home connected devices as well. So for Amazon, let's understand what its whole strategy is. So Amazon started somewhere around 1994 as a bookstore, as everyone knows the story, and their relentless focus on long-term growth basically led them to where they are today. Over the last 2 decades plus, I would say almost 3 decades now, Amazon has seen a lot of changes. It has pivoted a lot of things, but one thing has remained pretty consistent at Amazon is customer focus. They walk backwards through the customer, and as a result, Amazon has been extremely successful in launching new businesses, new products, be it within the Amazon. So on the retail side, you have Prime, fulfilled by Amazon. Then you have its own advertising business, which is also now pretty large, as large as like business, like it's the third largest now after Google, Meta as well, which itself is a pretty big feat for a company to have so many dominating businesses and also still being in the top two or three businesses in other domain as well. Retail, we already talked about. They are doing like close to 500 to 600 billion dollars a year revenue just in overall Amazon. Only Walmart is ahead of Amazon just in terms of revenue, right? So that's big revenue that Amazon does. Another thing that Amazon basically stands out with is that they're very, very innovative in the sense that they're very good with business. So they will quickly launch certain things, collect the feedback, see how it is going, and if it is good, they'll basically put the gas pedal, add more fuel to the fire. If it is not going good, they just pull the strings out and suck the life air out of it. So that's how Amazon basically continues to be innovative and continues to push new products out. That's the story in AWS as well, and same thing is in the retail side as well. But especially in the aftermath of COVID, we are seeing Amazon in its history announced very large scale layoffs. They were already known for pretty poor employee culture in Amazon. Even back in the day, 10 to 15 years back, also they were known for very bad employee welfare schemes and poor employee culture. They are known for it even now. But one thing definitely that has changed for worse is that with everyone else, they announced very large scale layoffs throughout like 2022, 2023, and 2024. And they have increased the number of pips as well at Amazon. However, having said that, there is another shift that we have seen that now the Amazon search results that you see are marred with a lot of ads, and this has definitely ruined the customer experience. But this is a change from what they used to be earlier. Another thing that I have seen in Amazon more recently is that with their recent, uh, you know, uh, you know, stock results that they shared, they have experienced likelihood of decline, like decline in the growth of e-commerce retail, and essentially things are looking downward, and again it signals that there could be a recession in the US, and as a result, Amazon is showcasing weakness in its stock as well. If you recollect, just a few days back, I talked about even Walmart is experiencing weakness in the next few quarters. And this again signals that people are very cautious, and possibly there could be a decline in the US economy, or like a soft recession at least to begin with. Uh, Couple this with the employment report that has come out. Now the unemployment rate has grown to 4.3% in the US, and this is pretty like high. And even the unemployment claims have also risen in the last, July actually. So which has caused a concern, and it is also impacting the stock market because there are concerns that US is definitely going into recession. This has also triggered like Fed to, and the whole industry is anticipating that Fed will at least cut the interest rates at least by 25 basis points, if not by 50 basis points, in September. So we'll have to wait and watch to see what happens there. So let me just read a few questions that Dheeraj Kumar is asking. Have these FANG companies have peaked like IBM, Intel, Boeing, GE, etc.? So none of the companies that Dheeraj that you pointed out are considered as FANG. So let me just explain. FANG used to be the name of Facebook, Amazon, Apple, Netflix, and Google. The whole topic today is that now this FANG is kind of irrelevant because now we call it them as Magnificent Seven, and they don't have essentially Netflix in them. So you have Apple, Meta, Amazon, Google, Nvidia, Tesla. These are the magnificent seven companies that are there, and which is what I'm going to talk about. I don't think that they have peaked, but this is more like the times in which we are living, right? So right now, as I said, there are a lot of headwinds that are going on in the U.S. economy, and of course, the global macroeconomic conditions. There are still wars going on between Israel and Hamas, Ukraine and Russia, even though we may have forgotten them, but they're still going on as we speak. And in addition to that, as I said, that unemployment rate is increasing. A lot of these companies have are posting their quarterly results, like Amazon, Meta, except for Meta, like Microsoft, Google, Amazon, Tesla, all of them have posted their results, and their stock has got a beating actually through the results because they are unsure of the future market. And even their investments in AI, which I covered in my previous conversation as well, are not seeming to be paying off as much as one would have anticipated. And as a result, it is showing weakness in their stocks. However, for Meta, and they have shown a tremendous growth in their advertising revenue. And in fact, it also seems like their investments that Meta has been making, the Facebook basically is making in AI, seems to be paying off as a result of their growth in their advertising revenue and business. So Meta stock is actually going to increase, and in fact, some estimates are it is going to basically surpass 600 mark as well, though right now it is basically no, basically touching around like 500. I think it was around 450, 470 ish again, but I think it should surpass 500 rather easily, especially for Meta. So let me jump ship onto Meta as our second company. Let's discuss that. So this is a so first one was Amazon that we discussed. The second one is Meta that we are going to discuss. So Meta, as we all know, is a social network company, and they own WhatsApp, Instagram, and Facebook, essentially as the top three, properties online. It is interesting to know that Facebook, or Meta as they will call it, is primarily a digital player, and their whole revenue model is based upon advertising, right? So they make money through advertising. So generally, running like a pure play digital platform such as Meta is much more easier than running a company such as Amazon, because while AWS, you can call it as pure play digital, but e-commerce has a lot of logistics, supply chain, and those kind of challenges where you have to deliver physical goods. So that is a lot more capital intensive, and lot more costs are involved, as well as a lot of operations are involved, which Facebook has none. So except for their data centers and things along those lines, they deliver all the products online, digitally. So there is no operations as such or delivery mechanisms as such other than online delivery that do. So there is no logistics overburden or operational overburden with respect to that. So that's the beauty of asset light business, which does not deal with physical movement of parts and things like that. So Meta definitely has that advantage. Meta over the last few years again has been very very successful. Mark Zuckerberg has increased the shareholder value tremendously over the past several years, and Meta started somewhere around like 2004, and again they are about a 20 years old company right now. Meta stock, as you know, at least last year in around 2023, it started kind of declining when all the other stocks like even Microsoft, Amazon, Google, all were declining. But Meta actually went all the way to like almost like $88 or so, right? They were running around like 400 ish, and they went to $88. So everyone was hoping that Meta has bombed, the metaverse has completely not worked, and people were like thinking that it's the end of Meta. But if you see this year, Meta kind of started their recovery, and right now Meta is, as I'm saying, is already close to 500, and it will basically surpass 500 as well. So Meta has shown significant recovery through their advertising, and their revenue continues to grow. Other thing to note for Meta is that they're a very innovative company as well. They hire a lot of people and push out a lot of features. Meta has been very categorical also to like kill their competition by acquiring them. So they acquired Instagram and both WhatsApp, which are both industry leaders in their own right, right? So I don't think there is any social network bigger than Instagram at this point of time, and there is no communication chat mechanism bigger than WhatsApp, which is global. We know VPay from China, WeChat is also like the biggest one as far as the numbers are concerned, but it's not, I think, worldwide. It's solely focused on China market. So from that perspective, I think Meta is doing very well, and even with the whatever is going on, recession fears, etc., going on, I think it will still be doing good and continue to leap forward. Um, Another thing to note, Meta is another company that announced very large scale restructuring and layoffs in 2022. They did that back again in 2023, and they did that again in 2024. And exactly, Meta told that this is going to be the year of efficiency 2024. And basically, every other company that we know of is following the same playbook. So that's the story about Meta. And again, they are a $1 trillion company as well, and they dominate the market. Uh, so Dheeraj Kumar's other comment is there is not much revolutionary innovation. You are right. Right now we are in a phase where we are seeing a lot of incremental innovation. Not sure if generative AI that you would have seen through Chat GPT, etc., would you call it revolutionary or not? But fundamentally, if you see, to some degree, there is some kind of innovation in Chat GTP as well, even though the work was happening in natural language processing. But this specific large language models through generative AI, the way they have made it easier for people to generate content, whether it is video, audio, or textual, it seems like it has definitely eased the way, like lowered the barrier to entry to operate and deliver those kind of things. So while it's not revolutionary yet, I would definitely think it is definitely better than incremental innovation that we see all over the place. So to some degree, I agree with you, but then generative AI piece, I'm still kind of jury is still out to see whether it really becomes transformative or it remains just an incremental innovation. So you mentioned only Nvidia is doing good, recession incoming. So yes, so let's move on to Nvidia since you just asked. So let's start out with that. So that's the third company in the Magnificent Seven. So Nvidia, if you see, is the older company here. It started around in 90s as a like a hardware manufacturer. Um, and again it comes under tech because it is still like hardware, and their name to fame was through their GPUs that they came out back in like early 2000s actually. And at that point of time they were more focused on basically gaming platforms. So PlayStation and things like that used to use GPUs because they were very good at graphics processing and floating point calculation, which is required in a lot of these video games, which are image processing, things like that. uh, then when this AI wave picked up, right, around almost 10 years ago, when a lot of machine learning and AI started happening on the cloud. So you have players such as AWS who have SageMaker, Azure has Azure ML Studio, and cognitive services. Then Google GCP has their Vertex portfolio, which has their general like AI and ML portfolio and things along those lines. And many companies across the world now regularly use some kind of machine learning or AI in their services, right? And this led to a very high demand of GPUs because their specialized hardware is focused on high precision calculations, parallel processing, think of such kind of workload that are fit for machine learning. So, especially in the last 2.5 to 3 years, Nvidia started kind of pushing upwards trajectory. So, just last year in August, Nvidia used to be around $200, right? And now it is above $1,000. So you can see in the last like 2 3 years, it has risen at least 10x, if not more. So it's a very steep rise for Nvidia just now because as generative AI bombarded in the last 2 years, I think ChatGPT first came to the market around late 2022 is what I would say. And immediately there was a like a gold rush between all the like cloud platforms and big tech players, primarily Meta, Microsoft, Amazon, and Google, who started investing very heavily in data centers and hardware for machine learning and AI. Not to mention OpenAI, who is investing quite a bit as well. And that resulted in very high demand for chips and especially GPUs from Nvidia. And as a result, you start seeing a very big stock growth for Nvidia. My theory is, and I also have documented another podcast specifically for Nvidia, is that Nvidia is riding the bubble, the generative AI bubble, extremely high right now. And by the end of the year, my suspicion is that Nvidia will lose a lot of its steam that it is seeing right now. which means that the AI bubble burst will happen sometime this year itself, wherein people will stop hyping the generative AI, and a lot of startups will go belly up, which are just focused on either writing wrappers for generative AI or using LLMs, building fundamental research, because this market will implode in a very massive way. However, I'm not saying that there will be demise of generative AI. Generative AI is very promising. It has some rough edges right now, but I think if you work very closely with generative AI, build some guardrails and use them in specific applications, there is a lot of gain that can happen. And I have also covered that in some of my other podcasts as well, specifically focused on generative AI. So it is definitely going to have a transformative effect on especially software engineering and creative industries. But when that effect would happen is only time will tell. But I think the seeds have already been sown right now, and we should start seeing the impact of it sometime like towards the end of this year and start of early 2025. And the massive like adoption of generative AI and its tools, etc., in creative industries will really go full steam in 2025, I think. So from that perspective, generative AI is here to stay, but the hype around it will basically fizzle out. And as a result, a lot of our big tech stocks, specifically Meta, Microsoft, Google, Amazon, and Nvidia particularly, would see like a correction sometime soon. So that's the story of Nvidia. Now moving on to Apple. So Apple is very different from all the other gang of companies, right? So how it is different is so Apple basically makes much of its money through its Apple Store, and also through its Apple iTunes. They make money through like their streaming services, and then Apple also have its iPhone, iPad, etc. So it has a very good hardware play wherein it uses its own kind of a logged, closed ecosystem to basically sell their products at a very high premium. And if you see in the last few years, Apple being the earliest of the companies here, right? It started around 1980s or something, right? Late 70s or early 80s, very same time as Microsoft started in late 70s. So Apple is the kind of oldest chunk till date what we have discussed right now, and as a result you would see Apple has continuously moved up. Stock has done extremely well, and it is one of the most valuable companies on the planet. Close to $3 trillion is their valuation right now. And Apple is probably the only company amongst the so far what we have discussed in the Magnificent Seven that gives a dividend. Only other company that does that is basically Microsoft. Nvidia, I'm not sure if they do give it or not give it. But then Apple is having a very strong mode because, as I said, they have their own closed ecosystem, both of their online services, which is their iTunes business, or their App Store business. But then their physical hardware business is also super closely tied, and it generates continuously significant revenue for them. And as you would see in countries such as China and US, there is a very strong following of Apple. And once you go Apple, they never look around back, and they always use Apple products only. So that makes their moat very, very strong, and it is very difficult for Android or any other company to basically, get in their domain. So that's going to be a challenge for many other companies to break Apple's monopoly in that. But in growing economies, as you would see, Google is the leading player, right, through their Android ecosystem. So, and some of the Android phones, like especially from Samsung and even Pixel phone, I think I remember it's, I think from Google itself, are actually pretty good. Actually, they're pretty good with respect to Apple. They may have even have more features than what are available in Apple. But Apple fanboys basically just like to just buy Apple no matter whether it is good or whether it is giving value or not. So now you can understand, why Apple is dominant, and they continue to basically lead the race, and they are the most valuable company because they make very huge amount of profits. By far, I think the most cash reserves, if any, that are there is with basically Apple from any of the companies that we discussed thus far. So that's the story of Apple. So now let's move on to Tesla, right? It's a very interesting company. So again, Tesla has been there for almost 2 decades now, even more than that, I would say. And they really started rising up during the COVID time, 2021, etc., where we saw a lot of people in the US are kind of buying a lot of Teslas, and Tesla would come out with their Model X and Model Y and their SUV, and now they also have their Tesla truck. I've seen it on road, and it seems like almost like a Lego block. I don't like its design or something like that. So I think it's all Elon's uh, interest for sci-fi flicks, and that's what he's converting them into movies. So Tesla stock is a very interesting stock. It's very very volatile. So it keeps going up and down, like very very fast. And let me read another comment from Dhruv Patra, recession incoming. Yes, so I think as you would see, as I'm mentioning it again here as well, that there are very high likelihood of recession here in the US. As stock market is jittery right now, you can see a lot of tumbling is happening in the stocks. The unemployment report has come out higher, which is not good for the economy because it has been now 4.3%. And overall, the sentiment is kind of negative and mixed. So it's highly likely that there is a recession, but until that happens, we wouldn't know. Because that has been the case for the last 2 years. We keep saying that recession is coming, but then it doesn't come. So we are in a stagflation at that point of time. But maybe this time around, recession may come as well. So, from a Tesla perspective, right? So they were doing extremely well, especially during the COVID times. A lot of sales happened for Tesla, which basically catapulted Tesla to a very high value stock. Like it already went beyond $1,000, and now what has happened in the past, let's say year or two, we have seen Tesla cut down the prices of their Model X and Model Y multiple times. That now the resale value of Tesla has like completely plummeted significantly, because now you can buy a new Tesla for a lower rate than what the second-hand cars are. And in the broader industry also, the whole second-hand car market has seen a very big dip here in the US. While in COVID time, there were huge challenges around spare parts and chips not coming, and there was a very big high in the prices of the cars. By the time now, there is a big recession basically in the second-hand car market, and particularly for Tesla, there is a very big downfall that has started happening. But then the question would be, why is Tesla stock not going down? Like if the car sales have dipped and they're not meeting their numbers. Well, as anybody would guess, Elon Musk is very clever salesman, and again he has used that Tesla is no longer a like a electric vehicle company, but it is an AI company, because he's going to launch robo taxi shortly. So whatever that means, whenever they launch. But again, Elon Musk also has a very huge following, much like Steve Jobs or Apple, let me say that way. And as a result, he's able to move markets based upon some of the announcements that he makes. Not to mention that he also has SpaceX, he also has Tesla, he also has Twitter, or X as they call it right now. Each of them have their own areas which are very different. So one thing I would definitely say, for a person to have such diverse interest and run such different companies itself is also a big deal, and maybe that is the reason a lot of people follow Elon Musk. But then again, as a human being, I think the way he conducts himself and basically operates with people, he comes out as a jerk actually to me. So I mean, you have all kind of people. Maybe some of these people are like that, but that's the way I think he basically comes out to be. So Tesla, in my mind, actually, if you see fundamentally, the company will see a decline, because Teslas are not selling enough nowadays, and there is a huge competition from Chinese electric vehicle car makers, which are selling same cars or even better cars than Tesla at a lower price. Similarly, all your Toyota, Honda, Nissan, all of these have their own electric vehicles now. Like Toyota Prius is a very fine car, has been there for 20 years plus, and they are doing like a great job. So I think there will be a lot more competition for Tesla, and just by launching newer Teslas, etc., they are not going to like really bring in additional revenue that they are looking for. So either they have to come out with this robo taxi and make it like a truth, or they will have tough time as they go forward. But again, as you say, Elon Musk is a very big spin doctor. He can come out with some or the other, things, and change the overall game. But that's quite possible. Next, let's move on to next company, primarily Microsoft. So Microsoft, as you say, is a big competitor of Apple, and then it competes with GCP and AWS on the cloud side of things, and then in the enterprise business also, Microsoft has a very big kind of domination. So I think Microsoft under Satya basically has grown a leapfrog, actually, I would say. Their Azure business has done incredibly well, and they have gained a lot of market share. They are pretty much neck to neck, basically, with AWS, right? And Microsoft has a very diversified business. Again, they are into pure play digital, so that's an advantage for them. So their office business continues to do well. Their operating system business is also kind of their cash cow. It still runs. A lot of companies have PCs that are still Windows PCs. Then their Azure business has significantly gained a lot of value, and it is generating a lot of revenue. And now their investments in the past couple of years, especially in the AI collaboration with OpenAI, etc., seems to be basically paying off for them as well. So again, I think Microsoft is a great, company which has shown a tremendous comeback. Similar companies such as HP, IBM, etc., are nowhere to be seen. So from that perspective, I think Microsoft is doing exceptionally well. However, having said that, I think we will see weakness specifically around AI. They have done a lot of investments in the past 2 to 3 years with OpenAI and other AI investments, which I don't believe are paying out so well. So they have their co-pilots, they have their GitHub, where they have integrated the LLMs and co-pilots as well. And while it's a good like tool, but I think a lot of companies are having hard time in building like enterprise use cases around it, and really utilizing it well. So I think in some specific cases such as coding, programming, system design, etc. If there are right kind of guardrails that are built, and there are very specific tailored use cases that are there, a lot of transformative work can be done. But so thus far, we haven't seen any specific examples of use cases where that has been done in a sustainable fashion. There are a couple of POCs out here and there. So I think it is much more about generative AI and LLMs and how to use them. It's not a critique of Microsoft as such, but because Microsoft has done a lot of investment in generative AI, I think decline in any of that work will have an impact on its stock as well. So Microsoft remains to be a strong company. It's very diversified business. It's a conglomerate in digital business with their Office suite, their operating system, Azure services, cognitive and AI services, and things along those lines. So it should still be strong. And again, they are also a $3 trillion kind of a company, so they'll continue to do well. But as I said, there will be some correction in the stock due to their investments in AI, which are not seeming to be paying off as much. So this is our pretty much. So we covered Meta. So now let's move on to Google, right? How can we forget Google? So we have already covered Amazon, Meta, Tesla, Apple, and then we covered Nvidia. So last but not the least is Google. So Google, as you know, right, again, it started out in like 98, 99-ish time frame, has been a market leader ever since. They own the entire search ecosystem, right? Google search, nobody has beaten it. Perplexity came out with like generative AI based search, but Google already has generative AI answers in its search. Even OpenAI is coming out with their own beta version of search through generative AI. We'll see how that plays out. But as I said, Perplexity is already there. But I don't think they are eating any market share from Google at this point of time. Google also owns the Android operating system, right? They acquired that company, so that's like a pretty big, play again, market leader in its own segment. Google also acquired YouTube, again the biggest online video delivery platform, as a social media kind of a play, and again they're market leaders in that. So Google also does very strong like revenues through advertising, and they're very strong in analytics, data, and machine learning business as well through their GCP offering. GCP is a very good contender, I would say, but it's like far third as compared to AWS and Azure. But overall, as I said, in digital business, there Google is also pure play digital business, very similar to Meta, and they continue to make a lot of money, very profitable company. And I think even Google is a company that basically laid off people in 2022, 2023, and in 2024 as well. So I would say like Amazon, Microsoft, Meta, Google, all of them laid off like people in droves. Tesla, as we know, laid off a lot of people like this year itself, though they did not lay off so much in 22 and 23, but 24 they like just laid off people in droves. And then Apple, on the other hand, and Nvidia. So Nvidia, I don't know of any mass layoffs that they have done in the past 2 to 3 years, because maybe their stock was doing just so good or their growth was so high. But then Apple has also not done very high number of mass layoffs, but I have seen they have dismantled a couple of their sites. I think in Southern California, I did compare this in one of my videos earlier, and but Apple's mass layoffs are not at the level of what like tens of thousands that like basically all these Meta and Google and Azure, like Apple, like Amazon did, right? So Apple's were more like in few hundreds, I would say, but not in tens of thousands of people that all your Microsoft and Amazon and Meta and Google basically laid off. So that's the story of Magnificent Seven, right? So the only odd man out here is Nvidia and Tesla, these two companies, which were not their part of FANGs. And Netflix has been removed out of FANGs because it's no longer growth and people don't see it as a investable company. Not investable, but it's no longer part of the big movers and shakers. Whatever I discussed, so Tesla, Nvidia, Apple, Amazon, Meta, Google, and Microsoft, they all are moving the stock market because combined worth is almost $10 trillion, and they continue to basically push the market forward, and any kind of concern or dip that we see in these stocks would definitely impact the whole industry and the stock market as a whole. And as you see, anytime these companies see a drop in their prices, it basically brings down the whole Nasdaq or Dow Jones or the overall index. So that's something to basically look forward to. I still believe these companies will continue to remain strong, but there will be some correction due to all of these companies investing heavily in AI, and it's not producing results as people would have desired as quickly as possible. So you will definitely see that kind of correction in future. But I do believe generative AI is here to stay. It could become transformative over a period of time. So, wrapping up right now, if you like this video, please like and share this. And if you have any other comment, please write it down. I'll be more than happy to basically respond to that. Till then, take care, have a nice day, and bye.